Hey all, I'm Nikhil. With me is Nikhil, founder of Kenstone Capital. In this show, we will be going through the intricacies of loans, of CIBIL, of credit score, and of some amazing stories of repossession. So stay tuned for a lot more episodes related to such interesting topics, which I'm sure you have not seen anywhere else on Finance YouTube. So Nikhil, for all of us, for the audience, for me, can you explain what Kenstone does and why we are uniquely positioned to talk about all these topics?
Absolutely. So, hi, this is Nikhil. I'm one of the founders of Kenstone Capital. So, when it comes to Kenstone, we have operations in 3 different verticals. Okay. One, we help people fix their credit repair. When it comes to, when you apply for a loan, basically, there's something called CIBIL that comes into picture, which helps the bank understand your creditworthiness.
Right.
Okay. And it is the thing in your loan approval process.
Right.
If there are any issues, if there are any defaults, or if there are any negative remarks, straight away the system itself will reject one's application or an individual's application.
It's not even going to go to a person.
Impossible.
Okay.
It's a straightforward system rejection. So this is where we come into picture. First thing is we have to help people understand what is the challenge or what is the issue. Second, we help them fix it.
Okay.
See, this is sort of a convenient service. This is not a rocket science. See, what is really missing is the awareness. People do not understand, first of all, what is CIBIL.
Right.
When they do not understand what is CIBIL, how do you think they understand the nitty-gritties of CIBIL?
Correct.
Right? No? We build awareness. We help them reach the right points or right point of contacts so that all those issues can be resolved and they once again become eligible for a loan. Okay. This is one of our product.
Okay.
Second, we help banks in their recovery process.
Okay.
We specifically work for 2 products. One is housing loan, the other one is vehicle.
Okay.
Housing loan, when somebody defaults on a housing loan, there's something called, or you call it as an NPA, right after 90 days.
Okay.
There's something called SARFAESI Act.
Right.
Okay, that becomes applicable when somebody defaults on housing loan or a mortgage loan, rather you call it as an umbrella term. So we help banks and financial institutions in terms of enforcing the entire SARFAESI Act.
So are you the Gunda the bank calls?
Not really. So it's a legal thing.
Okay.
It's a step-by-step process,
Okay.
legal.
Okay.
So people do look at us as munabais,
Okay.
who are involved in eviction and such things, but it's not.
Okay.
So
So you don't have Gundas?
we don't. We don't really have gundas.
Okay.
But still the perception is very clear. They look at us as gundas.
Okay.
A lot of people have questioned me because, Nikhil, you being an engineer, why do you want to get involved in some ground level stuff?
Right.
I said, see, this is not ground level. Banks are the lifelines. Banks and financial institutions are literally a lifelines of the country.
Okay.
If we break their back, the entire economy collapses.
Right.
There has to be somebody on the other side who is also educated
Right.
to hold the back,
Correct.
to hold somebody's back.
Right.
So I feel I'm holding the backs.
Wow.
Absolutely. So that's how I look at
That's
it.
your second thing, like
that's
home loan and vehicle recovery and repossession.
Absolutely. That's the second thing. The third thing is we also work with businesses,
Okay.
helping them collect their invoices.
Okay.
Whenever you supply a product or a service on credit, and generally the credit period ranges from 30 to 45 days.
Right.
And if your customer is not paying you, you
Right.
can come to us. We will help you collect. So these are the 3 products that we have at present.
Okay.
Yeah.
So guys, a lot of the things which he's talking about probably has negative connotation or whatever you want to call it.
Right.
And-
It does seem negative.
Right.
It does seem, some rogue elements might have been involved
In the past.
in the past.
But I will assure you, I have known Nikhil for quite some time. I don't think he's a gunda. Although I don't know the other side. But some of the work they do is quite interesting, and some of the stories which he has to share, I really wanted to document with this show. So let's get started. The first episode, Nikhil, and for the audience, we'll be focused heavily on home loans. We'll be doing home loans from the perspective of CIBIL, from the perspective of bank, from the perspective of repossession, right? And all the different ways which consumers have scammed banks, which builders have scammed consumers. I mean, this entire nexus which goes on where people tend to lose money.
Absolutely.
So, starting off with home loans, let's start from the consumer perspective.
Absolutely.
So, explain to me this, how does the CIBIL impact the home loan?
Okay.
And how do I increase my, if I want a home loan, how do I increase my chances of getting a home loan at a low interest? I mean, how do I go about that process?
Right.
What are the parameters? How does a bank look at it? Because you work with banks.
Right.
So can you help me out with this first?
Absolutely. So there are multiple angles, to the home loan and CIBIL score and such things. So let's cover one by one. So let's understand home loan as a product.
Okay.
Okay. When it comes to a housing loan, it's a long-term product.
Okay.
Right? If somebody applies for a housing loan, the term can range from either 15 years, 20 years, it can even go up to 25, 30 years.
Correct.
Okay, right? Now one bank is giving you money and it is expecting you to pay back in the range of 15 to 30 years.
Right.
That means first thing is you have to be alive right, for that long time.
Right.
Second, you should also have consistent income enough to pay them back.
Correct.
Right? So if you have to be alive, then their age group matters. Second, if you have to pay them consistently, then income matters. Right? Third, if they are risking their money by giving you for such a long time, then your creditworthiness also matters.
Correct.
Right? So this is where the CIBIL or a credit, in generic term is credit score. CIBIL is one of the credit bureaus that operates here in India. There are other three bureaus that are Equifax, CRIF Highmark, Experian. These are the other three bureaus, but CIBIL is the highly used ones, or highly reliable or relied upon by the banks. Okay. Now, credit score, while looking at the credit score from a home loan perspective, one banker checks the default. Are there any negative flags? Okay. It's a straight away rejection. Okay. Second, even if there are...
What do you mean by negative flags?
Negative flags. So, there are four kinds of negative flags. One is written off. That means customer hasn't paid.
Okay.
Okay.
In the past.
In the past. Okay. Let's assume it's a credit card which has gone into written off flag. Right. So that means customer hasn't paid the bank for 6 long months. Okay. So it's a compliance for the bank to write off that particular account. If a consumer doesn't pay for 6 consecutive months, okay, and they report to CIBIL as written off that particular account. Okay. So that means it's straight away default. Okay. Customer is not paying. Second is settled. Okay. Settled is a sort of negative flag, but settled account is equivalent to closed account, but it's also a negative. Wherein imagine I have a loan account. Okay, let's assume it's a credit card whose outstanding is a lakh of rupees. I don't have money. I go to bank and tell the bank that I don't have money and I hasn't paid you also from past 4 months. Right. Now I have some lump sum money via which I want to settle it off. Right. So bank, instead of getting nothing, rather they take that money, Right. So my outstanding is 1 lakh. I pay 50 grand or 50,000 rupees and settle it off. Right. Now 50,000 rupees is a loss to the bank, right? Correct. That's the reason they report it as settled. Okay. Yeah. That's also in the credit report. 100%, no, bank has lost 50 grand. Right. 50% is gone from their outstanding. Okay. So it's lost to the bank. Done. So that's the second type. And there's something called post written off settled. Okay. Post written off settled is first it was written off. That means I haven't paid for 6 long months. And account got into written off. Okay. Now, after getting into written off, maybe collection agencies were behind me. Right. Because of the pressure, I'm coming and settling the account. So you're paying the remaining amount? Not really remaining amount, but a part of the remaining amount. Okay. Yeah. Let's assume the outstanding is 2 lakh rupees. Right. I'm settling it at 1 lakh rupees. Okay. Now, bank is telling the other banks, which might give loans to me in future, that this guy didn't pay and the account got into written off. Okay. Then he came back and settled the account. Okay. Now it's post written off settled. You get the point, no?
Okay. So he only wrote off after lot of follow up from the bank. I mean, he only came and settled after lot of follow up
Follow ups from the bank
or through
collection agencies.
Yeah. Okay.
Right. So that's again a negative flag.
Thing,
Yeah.
Okay.
Because bank had to
Pay
put
money.
so much pressure,
Yeah.
pay collection agencies also, and get half the sum, half their outstanding.
Right.
It's a huge negative flag.
Okay.
Next is suit filed.
What is that?
Suit filed is bank have gone to court. Banks have one for a particular account. See, it depends on the value of the case also. The value of the, let's assume I have a personal loan worth
So where does Vijay Mallya fall in all of this? So he falls in the last year.
Yeah, I mean, great civil report doesn't matter for Vijay Mallya.
Right.
This is not applicable for him.
Right.
His loans are huge.
But yeah, so they've actually taken the consumer to court.
Right. They've basically taken the consumer to the court in a high value cases, maybe 5 lakh, 10 lakh rupees. It's a personal loan.
Right.
In a personal loan, there is no collateral.
Right.
And they have to take the guy to court.
So these are the main 4
These are the
absolute red flags.
Absolute red flags
So
for
that's
any
the
bank.
That's the first thing bank look at.
It's a straightforward rejection also.
Okay. So you're not going to get another loan.
100% sure.
Okay.
Period.
Unless it's some crazy Chinese app.
So the crazy Chinese app will give 2,000 rupees and nanga karke they'll daudayenge.
So,
And they'll collect 10,000 rupees.
So guys, this is going to be a very interesting conversation. Subscribe to the channel for this, but we're going to do a deep dive into the
nitty-gritties
of Chinese app companies. But coming back to the home loan conversation.
Yes.
So this is the first few red flags which are there.
Right.
What else does a bank look at in your
The
CIBIL?
second thing that comes, the major flag that comes into picture is late payments.
Okay.
There's something, we call it as, in a technical term, is DPD,
Okay.
days past due.
Okay.
That means, let's assume I have a personal loan and 5th of every month EMI becomes due.
Okay.
Okay. If I'm paying on 5th, then there is no
0 day past due.
Yeah, 0 days past due. Right.
Right.
No? If I'm paying 20 days late, it gets reported as 20
days.
DPD.
Okay.
Or 20 days past due. So if it's 60, then it gets reported as 60 DPD, 60 days past due.
Right.
So if banker sees any of these late payments, okay, he would never ever approve a home loan because I am unable to service my personal loan on time. How do you think I'll service my home loan, which
For
will
30
go on
years.
for 15 years, 20 years
Right.
on time? Right, no? You get my point, no? So bankers will, that's a straight away second red flag for any banker.
Okay.
So there's no trust. That means this guy is not reliable over a long period.
Correct.
So that's a straight away rejection.
Okay.
Or if you can convince the manager stating that in the past I had some issues or financial crisis because of which I had to make certain late payments, or I didn't have an idea that it gets reported as late payments. I just took it casually and paid whenever I felt like. These can be also an issue because there are people who pay every 3 months all the 3 EMIs. That's their mindset. They
For
think
whatever
that
reason.
for whatever reason they think that I'm paying all 3 EMIs in one shot. That's a fantastic thing, which is not. Every
Right.
time 60-day DPD is getting reported.
Right.
No. So which is actually hampering their profile, also hampering their score.
Right. Okay.
So this is one of the issues. These two are the major issues that comes into picture when while approving a home loan.
Okay.
Late payments, negative flags. If these two are right, 99% of the times your loan should get approved, unless there is other challenges. The other factors. See, whenever somebody approves a housing loan, there are 3 C's that comes into picture. One is creditworthiness, which we just discussed in terms of CIBIL or
Right.
your credit score. Second is your collateral. Your
Okay.
collateral has to be worth
Whatever they're
the
paying.
dispersal.
Right.
Third is your capacity. Capacity is your income.
Okay.
Wherein they ask your income statement, salary slip. If you're working for a MNC, then they want your offer letter to confirm your package
Right.
and all these things, which helps them measure your capacity
Okay.
to pay for housing loan.
Right. So from a consumer's perspective, this is what the bank is looking at.
This is what the bank is. These are the basic things that what banks look for.
Okay.
And let's assume you have one has less capacity in terms of approving, less capacity, or he has also multiple loans which he's already servicing, and he has less disposable income to the loan that he is applying for. Then they pick up a joint account.
Okay. With your spouse or something.
With your spouse or your parents or your brother or anybody who has an income, and you can equally share the EMIs.
So you give the bank's perspective.
Right.
Just a couple of days back, you were sharing some very interesting stories from a builder's perspective.
Absolutely.
So
it's a funny thing.
It's funny, but it's going to ruin so many lives.
Absolutely, next level.
Yeah.
I mean, it has ruined so many lives here in Bangalore, especially because.
So, guys, we're gonna get into this now. So, from a builder's perspective, what should a consumer be looking at?
Right. So, whenever you go for A grade builders, like you understand when I say A grade builders.
Right.
Generally, consumers do not have any challenge except the price.
Okay.
All these A-grade builders charge a bomb just for a 2 BHK or a 3 BHK. They'll charge 1.25, 1.5, 2 CR, up to close to 2 CR.
Right.
So not everybody can afford this kind of pricing.
Correct.
A-grade builders.
Right. I'd assume only 5 or 10% of the population goes to them.
Right. No.
Right.
Now then there are the next set of consumer that comes into picture.
Right.
Who also wants to afford a housing.
Right.
But at a lesser price.
Correct.
Right. Who will go to all these B grade or C grade builders.
Right.
Okay. Generally, the concept with all these B grade or C grade builders, they generally do a joint venture.
Okay.
The A grade always acquire the land.
Okay.
The land also belongs to them. They would have acquired it.
Correct.
Then developed it.
Right.
Then they would have sold all the flats. With your B grade or C grade, they never acquire the land.
Okay.
They always do a joint venture with the landowner.
Okay.
Now, when a joint venture happens, generally, I mean, setting aside all the nitty-gritties, the generic format is if the construction is 100 flats, 50 belongs to the landowner, 50 belongs to the builder.
Correct.
Now, the builder share is only 50 flats.
Correct.
Which he has to sell. The other 50 belongs to the landowner.
Correct.
Right? Now, let's assume the contract is executed between the builder and the joint venture, the landowner. Joint venture started. Builder comes up with the 3D modeling of the entire project and starts selling, starts marketing. That's how he raises funds. No?
Correct.
One, he would have taken a project loan from the bank.
Yes.
Second, he will start raising funds from the prospective buyers.
Correct.
Okay, he would have been selling 2 BHKs, 3 BHKs, 3 BHKs at a very low price, maybe 50 lakh, 60 lakh rupees. Right? Once the foundation is done, he will start accepting the bookings. Once he starts accepting bookings, he will have a slab-wise payments that has to come from all the buyers, prospective buyers. Okay. Now, what most of these prospective buyers do is they go to a bank, apply for a loan for this particular project, and mortgage a future house. Now, the house is not there; it's only the structure that is getting erected. Mortgage the future house. And get a loan. Right. The loan also, they'll not immediately get the entire funds. The funds will get released in slabs.
Right.
They'll keep giving the slab-wise payments to the builder. Builder will also keep erecting the structure. Everything is going fantastic. Right? Now there comes a point where let's assume some 50 to 60% of the construction would have been done. That means the entire structure is ready. It's only the walls that needs to be erected and complete the entire structure, complete the houses. So that I wouldn't say 50-60%, I would say only 40 to 50%.
Right.
That during that period, the slab-wise payments from the buyers also will come in full.
Right.
They'll also pressurize the banks to release the full amount because the builder has to literally complete the entire structure.
Got it.
Right. The buyers will release the entire funds.
Okay.
Right. Builder will amass the fund and leave.
He will leave.
He will leave.
Okay.
He will say that I have incurred losses, this happened, that happened, I won't be able to complete this project.
My God. Okay.
Yeah. Now who is stuck? Buyers are stuck.
Correct.
Landowner is stuck.
Yes.
Builder is enjoying, maybe in Dubai or Maldives, the funds that he has amassed from all the buyers.
Right.
Right. Now what specifically happens here is, over a period, the buyer is totally disgruntled because he gets that feeling that now he has to go to court.
Yes.
Even if he goes to court, the builder will not complete the project. That's very clear. He will
even with all the RERA and everything.
He'll clearly plead in front of the court that I don't have money to complete the project. I require money. I have to raise funds. Bank is not giving me money. Whatever that I have raised from all the buyers is gone into the construction itself. It's done. maybe one criminal petition would be done or criminal filing will happen, but that also goes on forever.
Right. It's difficult to prove or whatever.
They have to incriminate this guy. That takes really long time in a Indian legal scenario.
Correct.
Right? Now the buyer is terribly stuck.
Right.
Because he has a bank loan to clear for next 15-20 years.
And he doesn't have a home.
He doesn't have a house.
My God.
What instinctively what one would do? He'll stop paying the bank instinctively because he's not getting a house.
Yeah.
He'll think that bank will anyway go after the house.
Right.
Because it has been mortgaged.
Yeah.
But for banks, there's no house to go after.
There's only some pillars and slabs.
Some structures, pillars and slabs.
Right.
And there are multiple banks that are involved because there are so many, there are 50 houses.
Right.
Right? Or maybe 100 houses. You would have sold landowner's share also. God knows. That would have also happened.
Has that happened?
I feel so. I mean, that would have also happened in such cases. I hasn't seen. So, bank is defrauded. Now, in this case, what really happens is bank will go against the borrower.
Okay.
Borrower's the entire episode gets his financial transaction or the loan transaction gets reported to his CIBIL report or your credit report.
But what are you supposed to do as a consumer at this point?
I mean, it's a huge, it's sort of a trap. It's a huge trap. From a banker's perspective, the consumer has to pay the bank.
Correct.
Irrespective of whether this guy gets the house or not. Bankers are least bothered because they have to recover their funds.
Correct.
So, consumer is disgruntled because he's not getting his home.
And he has to pay a loan.
He will not pay. That's instinctive, no? He'll not pay. He'll say that you do whatever. But in the process, his credit report gets screwed next time. And in this lifetime for this guy, that particular borrower will never get a
loan again.
That is done.
He's out of the institutional loan system.
100%. Straightforward.
I mean, what do you do as a consumer when you have something like this happen?
I mean, it's a major trap. Either he has to pay back the bank and get out of the loop and go against the builder.
You can't get a stay order or something from the court?
Against the bank?
Yeah.
Impossible because it's a public fund, no?
Right.
And bank has rightfully given him money, no?
Right.
Now, what stay order do you think he can get against the bank?
So, all of this, and the builder will not be held accountable, of course.
He will be held accountable via courts, but it will take its own time. That's what I'm trying to say.
And during that
they
time,
understand the whole process. They also have a lawyer who will keep fighting.
And during that time, builder can do whatever he wants.
Yeah, he's just going. He's just scot-free. That's it. Absolutely.
So what do you
might be planning another episode, similar episode.
So basically enjoy till the funds run out and then do it again.
Yeah, absolutely. That's what happens.
So what are you supposed to look at then if you're a homeowner? I mean, who wants to actually if you're taking
I would suggest if you're going for a B grade or C grade builder, go for a completed project.
Okay.
This is a period thing. Don't go for a project that is getting erected.
Okay.
That is just getting started. You just had a look at the 3D view of the house, entire thing, and not the real view.
Right.
Don't go for it. So there is.
I have heard these stories.
Yeah.
Where they say that if you go for completed project, it'll be more expensive and all of that.
Right. Rather be expensive than not having a home at all. This is more expensive. You would have paid 50-60 lakhs. You would have there's a loan on your head.
I mean, do you have any real stories of cases like this you're handling?
Yeah, absolutely.
Like, without naming the builders or the persons, can you just explain some of them what has happened and what's going on?
I mean, just exactly like how I explained. This has happened with one of our banks also.
Okay.
Similar story. There are multiple buyers who are stuck with the builder because of the similar reason. Because the builder is just absconding, not completing the project. Buyers stuck because they don't have any home to move. And they have to pay the loan. Bank is behind them. And their entire credit profile is screwed because of this housing loan. They are unable to get another loan.
My God.
So their entire financial prospect goes down the drain. So imagine if you are a business guy and if you get stuck in this kind of scenario, you won't get a business loan. You won't be able to expand your operations, nothing. Nobody will give you a loan unless you clear that housing loan. if you try to clear that housing loan, that can have a major impact on your business, because
That's a lot of funds. Which
a
is
lot of funds that you are diverting from your business.
So what do you do? So as you said, make sure you at least, at the very least, take a completed project.
Prevention is better than the later cure in these kind of cases, because the exposure will be on the higher side. You will end up with a 50 lakh or a 60 lakh on your head as a loan.
Right.
So prevention is always better. If you are going for a B grade or a C grade builder, always buy a complete finished houses with all this.
So I have a question,
OCCC.
sir. You get a lot of these builders, even B grade and C grade builders, who say that the bank loans are for this project are pre-approved by this builder. I mean, pre-approved by these banks. What does that mean?
See, bankers are pressurized to give loans because the business of banks is lending. Right. Bankers also do not really vet the entire project, because they are going to lend loans to buyers. Not to the builder. Right now. Now it's the buyer's discretion.
So it's no longer, even if it's a pre-approved project by a bank.
The bank loan will be in the name of a buyer, not in the name of a builder.
Right.
You get the point, no?
Right.
So bankers are not taking risk on the builder. Bankers are taking risk on the buyer. They will anyway verify the buyer, no? Because we have to have a proper credit profile. He has to have the capacity to pay back the loan.
So you guys focus on cases in Bangalore and Karnataka.
Right.
How many cases like this have you personally seen?
A lot of them.
Like
multiple
if you have to put a number?
I would say 5 to 10 in my experience.
5 to 10 projects?
5 to 10 projects.
That's like at least 500,000 customers.
Easily.
My God.
5 to 10 projects, I would say, not 500,000, I would say 5,000 maybe, or
5,000 customers.
500 customers, 500 to 1,000.
500 to 1,000,
Right.
500 to 1,000 customers.
Easily.
Wow.
This way you would see.
This is almost like how 500 crores or whatever, like 250, 500 crores is just stuck like this.
Easily.
Guys,
more than that, this is in my experience, I am saying. But more than that, you go to any big cities, you see all this problem.
So guys, you heard from the bank's perspective. You heard from the builder's perspective as to, what a consumer, like what they are looking at and how they are approaching it and how you need to approach it to protect yourself.
Absolutely. And if you have any questions, you can shoot it down.
Yeah. So please let us know in the comment section. We will take it up in the next episode.
Answer with the facts.
Yeah. And one more important thing is, Nikhil works with these customers. He works with these banks. So a lot of stuff which he's saying is actual. He can actually find out the answer if we don't know.
Absolutely. Because in the conversation, I might be missing out on a lot of facts. If you ask specific questions, I can list down the facts and be absolutely specific. In terms of addressing.
Absolutely. So let's move on. This was one of the home loan scams, which you could say, which a builder does.
Right.
Have you seen any other home loan scams which happen?
From a builder perspective. Builder perspective, I think we are kind of.
You had told me another story. So this is one where the project is not completed, guys. But there are some more stories where the builder has managed to sell the same home to multiple buyers.
Right.
So would you like to cover that home loan scam, like how that operates, how that works, what happens exactly?
Right. See, here what has happened is, I think this is one odd case. Not every house was sold to, multiple people.
Mm-hmm.
But this is one of the common scenarios in banking from a bank's perspective, wherein the collateral is just one. It can be an individual house or it can be a flat.
Okay.
Not just the builder, I would say house owner who has a fraudulent intention and who wants to defraud bank.
Okay.
He will, in one shot, he will go to 10 different banks.
Right.
Okay. And he will also take certified copies of his title deeds.
Okay.
Right. Because original title deeds, you will have only one copy, right?
Right.
Okay. Now you will go to bank and tell the bank that I have lost all my originals. Now I have gotten the certified copies. Certified copies, you can get multiple copies.
Okay.
Or you can take, in certain cases, they have put color Xerox also. Color Xerox of the same title deeds.
Okay.
So during the legal verification also, they have a way through. Because here in India, you know, I mean, across the globe, anything can be done
Right.
by pushing money
Right.
into the pockets.
Right.
So this way, they push money through multiple pockets.
Right.
They get the legal verification done.
Right.
They get the loan approved
Okay.
from multiple banks.
Okay.
But the collateral is the same. Let's assume the worth of the collateral is 1 crore of rupees.
Okay.
Let's assume, as per the banking terms, 80% is the sanctionable amount.
Right.
75 to 80 lakh rupees. You raise 75 to 80 lakhs from, let's assume, 5 banks.
Hmm.
So
That's a lot
8 5s are 40.
So you've leveraged it
literally-
like 5:1, 10:1.
Exactly. You have literally raised 4 crores from 5 banks
Hmm.
and left the city.
Wow.
Now 4 different banks. Now the account goes on default, they call it as quick mortality. It's a quick mortality for an account from a banking perspective. This particular account will be classified as quick mortal. Okay, because after taking a housing loan, no EMIs have been paid.
Right.
Okay, this is a huge red flag for their internal auditors. It's a huge red flag.
Right.
Because they'll question everybody as to how did you even give this loan? Because he hasn't paid even a single loan. Then they realize that 4 other banks are also affixing notice on this particular house.
Oh my God. Huh.
So this is a scam.
Wow.
This happens quite often, and I would say this happens because of the involvement of multiple parties.
So there'll be someone in the bank also who's involved.
Right. So
this is another scam which builders, which not builders, but some specific homeowners
somebody who wants
can
to
do.
defraud the bank and raise funds.
So
this is a proper fraudulent intention.
Yeah. So guys, one of the things to understand is, this is of course not for all homeowners, but one of the reasons banks are so cautious giving loans and things like that is this itself, that there are players like this in the market. Now, let me ask you this. So you told, okay, home loan this is how you can be careful.
Right.
You're like, screw it, I don't want the home loan. I will take a lease. Okay. So I'll go and I'll take a lease at a home.
Right.
At the very least, next 10-15 years, I don't have to worry.
Right.
But you told me that that's also not a great idea. Guys, I'm not trying to paint a dark picture here. I'm just sharing reality of what happens in Indian market. So at that point, what do you think? Is that a safe option?
I wouldn't say it's a totally safe option.
Okay, why is that?
Because, see, whenever you go take a house on lease, first thing that you should verify is the owner.
Okay.
What is his behavior or a character, whether is there a loan on his house,
okay,
or anything of such sort, some dispute,
okay,
or anything of such sort, especially the loan on house.
Okay.
If you talk to him, if you understand his behavior or character, you will also sort of understand his credit profile also.
Okay.
Right.
Why are you saying all of this? Why are you asking me to be so cautious?
Why? Because if he has a bank loan, see, everybody will have a bank loan.
Correct.
That is, if you visit houses here in Bangalore, at least I think 50-60% of the people will have a loan on their house. That's
Absolutely.
not a challenge.
Right.
Okay. People will also be paying their EMIs on time as well. I wouldn't say that. If that wasn't happening, then our economy would have gone to the docks.
Absolutely.
Right? So I think most of them would be paying on time as well.
Okay.
So there's no challenge.
Okay.
There will be somebody who will also default.
Okay.
Right? If you end up with such guys, then literally you will get evicted from that house.
Even if you've paid the lease to him.
Exactly. And that lease amount, think that lease amount is gone.
Wow.
That's a write-off for you in your credit profile.
Okay.
In your books, you have to write it off.
Even if, okay.
Yeah.
So has this happened? Like, are you just telling a scenario, or have you seen cases like this happen?
I have seen hundreds of cases like this.
Okay.
So let's assume there's a borrower who has taken a housing loan, and he has constructed a house.
Okay.
Of multiple stories.
Sure. So say he's made a 4-floor apartment.
4-floor apartment.
Okay.
It's like 7-8 houses. And after constructing the house, he has given all those 7 houses on lease.
Okay.
Raised, let's assume, 8 lakh rupees from each house. So 8 sevens are, it's 56.
56 lakhs.
56 lakh rupees is what he has raised.
Okay.
And leaseholders are also happy because for their entire lease term, they don't have to pay rent. And also they're going to get that 8 lakh rupees back once the contract is over.
Correct.
That's the general scenario.
Right.
Now let's assume he defaults on the bank loan.
Okay. He stops paying the EMI.
He stops paying the EMI. NPA happens, which is 3 months.
Okay.
3 months of non-payment. 3 consecutive months of non-payment is your NPA. After NPA, we come into picture.
Okay.
Which is SARFAESI Act.
Right.
Okay. Then we start off with notices.
Okay.
This is called demand notice, which is Section 13(2) of SARFAESI Act asks the bank to send a demand notice.
Okay.
Once demand notice, then happens symbolic position. Then symbolic position, then bank will go to court, get a Section 14 order, which clearly states that the banker can now evict the
tenant.
It doesn't matter. Evict, clean up. I mean, take physical possession. They call it as physical.
Okay.
Take physical possession of the house.
Okay.
With the assistance from the jurisdictional police.
Okay.
Once the Section 14 order is issued, then bank will engage an external agency which will assist the bank through the entire process of physical possession.
Okay.
Here comes tenants. Here comes the leaseholders. The leaseholders will be forced out of the house, and the physical possession will be taken. Now, who has come in the crossfire between the borrower and the bank are the leaseholders. So there is no the leaseholders
have no rights.
Have not committed any wrong, right?
Correct.
They have not committed any mistakes.
Right.
Their only mistake is getting a lease
from the wrong guy.
This particular borrower.
Right.
Right. Now, bank has done anything? No. The bank has dispersed funds.
Right.
It's the public money.
Right.
Bank has to recover. If they don't recover, then bank will.
It's a loss for them.
One is loss. If this continues, then bank will go bankrupt. Right? No, bank will go bankrupt.
Absolutely.
You can't shower money, you can't print money.
Right.
Just like that. If you print money, then it goes through the roof.
Right.
Inflation, hyperinflation, all those things will come into picture.
Correct. You can't print money.
Exactly. So they have to recover. So
what happens then?
So leaseholders have to go to court against this borrower to recover the funds.
But at that time, he cannot stay in the home.
No, impossible. They will be evicted.
My God.
Yeah.
So this lease owner, despite having paid the lease amount, is now evicted from the home.
Evicted from the home. And a lot of times, most of these lease deeds, you call it as lease deed, no, are not registered.
Oh my God.
Yeah. This is just like your tenant agreement, rental agreement. This is again lease deed which is not registered. This is not signatured by the owner and the leaseholder. That's it. So if it's not registered, it's difficult to get a ground in court as well. It will anyway get admitted, but it's very difficult to get a ground and get a order against the borrower.
So you've had to evict lease owners who have not done anything wrong.
Exactly, absolutely.
How have you handled this?
I'll also add third. So third, in many cases, what we have seen is the lease deed is invalid because the period is over. The term is already over and they have not renewed their contract. They're holding some old contract. Imagine they don't have any ground to go to court also.
That's just sad, man.
Absolutely sad.
And
similar case happens with the tenant.
And you've seen hundreds of cases like this.
Yeah. Similar case happens with the tenant, wherein they lose their advance. Whatever 1 lakh, 2 lakh rupees as an advance, they would have given to the borrower. That's gone. You think that it's gone. We also tell them that we have to write it off.
My God.
Yeah, it's gone. So one needs to be cautious. I'm not sure how, because they can't go check the borrower's credit profile. They might have to ask for the CIBIL profile.
No, so you're saying, have you had to evict or have you had to enforce a SARFAESI Act for people who are living in rented homes as well?
Absolutely.
How often?
This happens quite often because most of these houses are either rented or leased.
Okay, so most of the EMI houses are saying like...
Yeah, most of these houses.
So even at
we
that
hardly
point,
see
the renter's advance is also gone probably.
Gone, 100%. Not probably, it's gone. It will be gone.
At least the renter has some kind of condolence that he can probably find another house quickly.
Right. One is quickly, and the second, the money that he is losing is not on the higher side. He might be losing maybe 90 grand or 1.5 lakh or max 2 lakh rupees. But imagine leaseholders. People have lost 15 lakhs. 15 lakhs, 20 lakhs.
My God.
We have seen cases wherein people have lost 30 lakhs. 30 lakhs also.
Wow. So guys, Builders, be very careful when buying a home, be very careful when leasing a home, be very careful even when you're renting a home. Even if your CIBIL is great, literally that doesn't matter in the point of that transaction.
Right.
Because the transaction is with someone else completely.
Absolutely.
So I'm curious now, like now that you've told us about some of these, like how the bank's perspective, the builder's perspective, the lease owner's perspective, the homeowner's perspective. You've of course done a lot of repossessions for the bank.
Right.
I'm assuming not using any gundas.
Not really, absolutely not.
So, but can you like take us through a typical or some interesting repossession story which you've had?
Okay.
And what was the entire scenario which had happened where multiple stakeholders were affected and things like that? And how did you guys handle that situation? And I'm asking this purely from a perspective of what happens from the bank's perspective in such scenarios, and because you're representing the bank in these transactions, right?
Right.
So can you take me through that?
Yeah, absolutely. The first thing that I would like to start with is, from a bank's perspective, bank do not want the property, right?
Okay.
So this whole exercise of SARFAESI Act and the final action of physical possession as well as the sale is an extreme act. The physical possession is an extreme act, wherein any of their notices, requests, approaches towards the borrower is not working when bankers feel that. So when it comes to enforcement of SARFAESI Act, it doesn't mean that we straight away go to court, get the order and straight away evict the borrower or the whoever that's residing inside the house and sell it off.
Okay.
It doesn't happen the way I'm speaking, the way I'm talking. It takes quite a lot of time.
Okay.
And bankers are also mindful of the entire act. They also understand that a lot of emotional aspects are involved.
Right.
So we also approach the borrower you can say n number of times, telling them that this will result in an eviction or a physical possession of the property. Please make the payment, regularize the payment, or at least even try to sell the property and close the account.
Okay.
Do whatever you possible so that we can avoid all these
legal hassles
or the consequences of not making the payment.
Okay.
If the borrower do not pay heed to any of these, requests or the notices that has been affixed or sent to the borrower, then there are no other, the ways. When there are no further ways, then we have to resort to this last thing called physical possession. Here also, banks always want liquid cash. What do I do of this house? Right. No?
Right.
So I only want the liquid cash. If you pay me the liquid cash, I don't want your house.
Right.
That's how it is. Right. No? Now here in this scenario, when we go for a physical possession, so 3 different aspects come into picture. One is the borrower. Okay. Second, either tenants or the leaseholders. Okay. And the banker going towards it. Now banker will take an assistance from an agency like us. Okay. And there are 3 different, the stakeholders that are involved. The court will, when they issue a Section 14 order or the court order, they'll appoint a court commissioner.
Okay.
Okay. Court commissioner is a lawyer appointed by the court to do the entire process.
Okay.
Now, it will also ask the jurisdictional police to assist the court commissioner.
Okay.
Basically, when I say assistance, protect.
Okay.
From any untoward consequences.
Physical
threats or abuses.
Right.
Protection. Basically, police is there to protect.
Okay.
During the process of taking physical possession.
Okay.
During the day of physical possession, all these authorities will be present. One is the bank, who is the authorized personnel to whom the property belongs.
Okay.
As per SARFAESI Act, once it's mortgaged and it's enforced, the property belongs to the bank. That's why we are enforcing. No?
Correct.
That's why we are getting the eviction done and taking over the property. The authorized personnel of the bank will be present, court commissioner will be present, police will be present, and people from the agency who will assist through the process will be present. Okay. During this process, one is the leaseholder and the borrower. They will obviously, put resistance, right? No?
Of course.
Whom do you think? Because a house or any material is always an emotion.
100%.
It's not just the house. It's my house.
Right.
When I say my house, there is a huge, very, very strong bonding or an attachment towards that house because I have put my sweat and blood in building the entire house.
Absolutely.
I know that I have defaulted on the banks. I haven't paid the bank, but this house belongs to me.
Right.
Okay. In a lot of scenarios, what we have seen is, multiple borrowers bringing cash and settling the accounts. That also happens. This is the one consequence.
Okay.
Wherein they arrange funds, get it from somewhere, or in certain cases, they themselves will have it. They're willful.
Okay.
And their thinking is what banks can do.
Okay.
Anyway, I've taken the housing loan. Let me see what banks can do. This is the attitude. This is one of the attitudes.
Okay.
Okay. Those attitudes will straight away pay.
Okay.
Because they have cash.
Okay.
I have seen people paying 80 lakhs, 90 lakhs in cash.
One shot.
One shot. Straight. Closing the account.
Wow. Okay.
Housing loan. Closing the literally closing the housing loan. This is the one scenario that happens. Second, if the borrower doesn't have money, but he has to put resistance. He will put as much resistance as possible. We have seen in certain cases borrowers hitting also.
Okay.
Yeah, abusing also, physically abusing also.
Which is why you take the help of the police.
Exactly, physically abusing also. In those cases, police will straight away arrest them, put them in behind the bars or register an FIR and such things.
Like any crazy stories here?
Yeah. In one of the cases, the father had taken the money. The son, in the rush, ended up hitting the lady police.
Oh my God.
Imagine the consequences. He was arrested. He was straight away booked. FIR was registered. He was taken into custody. Then JC happened. He was in jail for a couple of days. Came out on bail, and unnecessary FIRs are registered. Literally, he gotten registered. Now he has to fight those cases also. Apart from the banks, SARFAESI and such things.
Wow.
Okay. Now here against SARFAESI, they have two appeals.
Right.
The borrower also should have some,
powers here. Yeah.
Yeah. So they can either go to DRT, we call it as Debt Recovery Tribunal,
Okay.
or they can go to High Court.
Okay.
Pleading High Court that give us some time, we will pay back.
Okay.
Now what generally happens at these two authorities is they'll give a stay, but they'll ask the borrower to pay a certain money.
Okay.
It can be 10%, 20%, 35%, depending on the judges.
Okay.
In one of the cases, the High Court had asked to pay the borrower 20% of the outstanding, so that, and they'll give a stay on the entire process.
Okay.
He failed to pay that 20%, and the stay got vacated.
Okay.
Right, and we went and enforced. So there is a recourse for the borrower, but he has to make the payment.
Okay.
At least 20-25% in that range.
Okay.
Only then he can get a recourse.
Okay. So this is typically how it works.
These are the typical things. And in between, they also try to put resistance via the leaseholders or the tenants.
Okay.
Yeah.
For example?
They'll become emotional, they'll cry, they'll gather people, they lock themselves up inside the house.
What do you do in such scenarios?
Break open the door.
Okay.
Yeah, break open the door.
It's no longer the property of the person, is what you're saying.
It's no longer the property of the borrower, right? No, it's no longer the property. The property belongs to the bank.
So you explained this entire SARFAESI Act from the bank's perspective and how you've handled it. I'm sure you've had customers, the consumers who have, had to go through this.
Right.
So what has been your advice to your consumers how to handle this entire thing?
I would rather say don't default.
Right, of course.
Than going through this rough scenario.
Right.
See, SARFAESI is emotionally draining.
Okay.
For anybody.
Okay.
Because it's a physical possession and eviction happens.
Okay.
We live in a society. We don't live in isolation, right? No, we live in a society basically.
Right.
And we are also really mindful and watchful of people watching us.
Right.
Right. No, of everything.
Right. Of course.
If you literally have somebody, the whole world watching me and getting evicted of my house, it's a huge disgrace, or it brings in extreme emotional trauma.
I mean, I'm curious now. So you say a consumer comes to you, he's like, I'm unable to make these payments.
Yeah.
for this particular home loan. My CIBIL score has also become bad. What do I do then?
I would suggest him rather sell the house.
Okay.
Or if that is also not happening, peacefully give
it to the bank.
Surrender the property to the bank peacefully.
Okay. And like what should he do next? So just forget about that house now.
He has to move on and find a job, find a work.
Right. Let's
start earning
and start building up your
afresh.
repair again.
Yeah, start afresh.
So I'm curious now. Say a person has undergone this, surrendered the house and all that. Is there any chance for him to rebuild his CIBIL score?
It's a bit difficult. Why? Because once the house is surrendered, it goes on auction. Let's assume that it gets sold on auction also. 99 or 95% of the times, it never covers the entire outstanding of the bank.
Okay.
It covers the 80%, 85% of the entire outstanding. Let's assume the outstanding is 1 crore. Now it covered, the house is sold
at 80 lakhs.
80 lakhs. Now 20 lakh again is the remaining. So that goes on settled. So that gets reported as settled in his report. And the entire DPD for an entire extent would have been reported. So it takes at least one, he has to pay that, close the settled account. Second, at least it takes another 3 years for his credit profile to get rebuilt.
Okay.
Yeah.
But it is possible.
It is possible. 100% possible. He has to arrange money to close the settled account and
start working to repay it.
Start working towards repayment it and wait for a certain period so that the algorithm do not pick up the same DPDs.
Okay.
So CIBIL picks up 3 years ka history.
Okay.
Below 3 years, it won't pick up.
Okay.
Yeah.
Above 3 years.
Yeah, sorry. About 3 years. It always picks up the last 3 years.
Got it.
Yeah, beyond that, it won't pick up.
Okay.
So in last 3 years, if you have hell loads of DPDs, write off this, that.
Be patient. Work yourself up and do it.
Yeah, absolutely.
Okay. So this was, now there's one very specific perspective I wanted to discuss with you about home loan.
Okay.
And I think a lot of people ignore this entire thing of guarantors.
That's a funny, crazy story. I've seen people guaranteeing a borrower.
Okay.
And getting evicted from his own house.
So
because the borrower has defaulted.
So can you please explain what you tell your customers about why don't become a guarantor? You told this to me earlier.
Absolutely.
But also what's the perspective like of the bank or how they go about doing this? Like, do they have the right to repossess or guarantor's home? So tell me both the perspectives.
One should really understand about putting a guarantee on somebody's loan.
Okay.
The loan application is extremely clear. Okay. What it clearly states that if borrower fails to make repayment, then the liability is on the guarantor.
Okay.
So guarantor is equally responsible to make the payment. This fact, if one understands, nothing like it.
Okay.
Right, no? If I understand this fact and then putting guarantee, I'm taking that liability. I clearly know that if whoever that I am guaranteeing doesn't pay, then I have to pay. I know that. I'm conscious of the fact.
Okay.
Then I'm prepared.
Okay.
When somebody is not conscious of the fact, then he's not prepared, then he'll be surprised. So it's a huge surprise.
You have some spicy stories about this. I'd love to hear this.
Yeah, absolutely. I mean, for one of the banks that we were working with, okay, had a guarantor account where one of the borrowers had borrowed a housing loan with a guarantor because he had to borrow more.
Okay.
Whatever collateral he had given
was not enough.
Didn't suffice. Was not enough, basically. So he got a guarantor.
Okay.
The guarantor's house was also mortgaged in the process.
Okay.
See, I mean, then it's a very clear fact that the borrower defaults, then the guarantor's house is also at stake. Right, no? So then borrower defaulted.
Okay.
We ended up evicting the guarantor also.
Okay.
Both the guarantor as well as borrower's house was evicted and taken.
And what was the relation between the guarantor and the borrower at that point?
They were friends, yeah. I mean,
they were just friends.
So the guarantor's wife was literally slipping the guarantor.
Wow.
That I told you.
Okay.
Don't guarantee. Now we are thrown out of the house. Don't put a guarantee.
Okay. I'm curious now. Have you put a guarantor on any loan?
Never. I don't even think about it.
Okay.
And I have not mortgaged also.
Okay.
After doing so many cases, after going through so many cases, I'm scared of mortgaging my house also.
Okay.
And so I do not have any mortgage loans.
So
I
guarantee
only have credit
is,
cards and personal loans, but no mortgage loans.
so guarantor is like, it's basically you have agreed to pay the loan if that guy doesn't pay the loan.
Very clear in the loan agreement itself.
Okay.
If the borrower fails to make the repayment, then the liability is on the guarantor. So both are equally responsible to make the payment.
Absolutely.
So the liability is on both.
Okay.
And even inside the credit report,
Right.
the same loan account appears
Okay.
as guarantor.
Okay.
With all the DPD and everything. And the same
Okay.
loan account will block the guarantor from getting a new loan.
Oh, so the guarantor's CIBIL score is also impacted.
Obviously, big time.
Wow. Okay.
And the same loan account will block him from getting a new loan. 100%.
So guys, there you have it. This was our first episode focused on home loans. The subsequent episodes will be discussing car loans and some incredible vehicle repossession stories. Nikhil has been part of. In fact, I've told him I think we should sell rights to some movies about the repossession. But stay tuned for that. Do subscribe to the channel.
Absolutely.
If you have any other questions which I may have not covered, because I just have a list of few questions that I prepared,
Right.
please let us know in the comment section below.
Right.
We'll cover it in the next episode. And of course, you can check them out. Check out Kenstone Capital. The link is in the description. If you need help to help repair your CIBIL score and make sure that you're eligible for home loans at pretty good interest rates, link is in the description again. Thank you so much for watching. Nikhil, thanks for doing this.
Thank you so much.
It's difficult to grab hold of him, so I'm trying to extract as much stories as I can to share with everyone about what really happens in the vast and ever-growing the loan industry of India. See you all in our next video.
Thank you so much.